PayPal stock's been absolutely hammered in the stock market since mid 2021. It's down over 80% at this point. The question is it worth buying? Is it a value stock or a value trap at this point? Will it outperform the market in the years to come? I'm going to have a look at the company in this video, look at some of the possibilities to see what might happen or might not happen. Hi everyone, JJ here with The Art of Value. Well, let's get into having a closer look at PayPal. So relatively recent news with PayPal is they now have a new CEO, Alex Chris, who was previously with Intuit for 19 years and ran a division there that was worth over half of their revenue. So a lot of experience in a similar sector. While there, he led the acquisition of MailChimp, which is arguably not a great acquisition. At the time, it was quite expensive, seemingly so. 2021, a lot of things were bought expensively. So there's a question mark also about what he might do at PayPal. If he does something like that, that would not be a great thing. The market would probably look at that over time. It's not a good thing. So there's a question mark over that, but he is experienced and it remains to be seen how he will do at PayPal. On the other hand, he does have that experience of having an acquisition. He could do a transformative acquisition at PayPal. He could do something to transform the company. He could lead it in a good direction with an acquisition, but a new CEO, it's a fresh start. This new CEO is stepping into a company with 400 million active consumer accounts and 35 million merchant accounts. They have a two-sided network with a huge number of consumers with digital wallets, and they have a payment gateway with a huge number, tens of millions of merchants as well. They have some strong brands that people trust in Braintree, Venmo, and PayPal itself. They have a fast-growing buy now, pay later business. Now that's all good, but some of the perceived downside with PayPal is the number of competitors they now have compared to a few years ago. There have been competitors enter the market and big ones like Apple Pay. And so that's a risk that people see. And I think it's a real risk. There is competition. Is a moat being eroded over time in the future over the next years? Will that continue to happen? Will they be losing more and more market share? And is that the reason that the price is down? And does it deserve to be down because of this? Could it be a value trap for that reason, that they'll just start losing market share even though they're earning money? Obviously, Apple's a risk here. They're a gorilla, one of the biggest companies in the world, very deep pockets. Could they erode PayPal's moat here? Could they take over bit by bit? They certainly have a lot of power. Is that one of the risks, a real risk? I think it is. And we have merchants in the market considering other options, good options like Shopify and Stripe. I'm seeing Stripe more and more, using it for different things myself, and the other payment gateways that are taking market share as well. Is PayPal's market share going to be eroded away bit by bit? PayPal's active accounts have been declining over several quarters, so that's definitely been a concern for the market. And their take rates, the amount of money they can charge, has been coming under pressure, as have their margins. So the competitive pressures are real, as happens with capitalism. They have real competitors, strong competitors. Can they keep their market share, grow market share? That's what investors like to see over time. A company that's growing market share, not losing it, or trying to become more profitable while just maintaining market share or even losing a bit. Investors like to see that they're a company that's growing market share over time, growing a moat, widening a moat. Is this happening with PayPal, or is it losing its competitive advantage? And does that make it a bad investment over time? These are the things that we have to question as investors looking at companies like this. There are recent signs that they're starting to turn this around a little bit, and this new CEO could help here. It remains to be seen. They have about 7 or 8% growth with improving profitability. Having said that, this improved profitability comes from managing expenses, better efficiencies, as many companies are doing over the past few quarters. Taking all that into account, we still have a business here that's facing lower margins because of these tough competitive pressures, increasing competitive pressures. So what will happen in the future? Where does PayPal go from here? How will it handle this in the future? That's one of the big questions for investors. If an investor was going to buy here, is it going to work out? So in PayPal, we have a business that's been losing market share, but it does have around $5 billion of free cash flow, which is not nothing. It does have significant stock-based compensation, so that has to be taken into account as well, but still really significant free cash flow, as you would expect from a company this old. It's not a new company. It's not a startup. It's been around for a long time, but now facing intense competition. Do we want to invest in a company with growing market share or one losing market share, or can it fend off these competitors that are attacking its market share? Can it do that? Great investors have often said that we only know how good a business is when the moat has been attacked, when its market share has been attacked and it's fended off competitors, that we really know how good that business is going to be. We think of companies like Google, which has stood out from the pack on search for many, many years over time. It's got a dominant market share. For me personally, I do like companies that have growing market share or the potential of it, a long runway for growth. And here, that's a question mark. Over time, we'll have to see over the next 5 or 10 years, how is this going to work out? Is their market share going to be eaten away? It's not to say that PayPal won't grow over time, but is it single digits? Is it double digits they're going to grow over time? Or is it going to shrink? Is their market share going to shrink? And is their growth going to slow down as we go along? Different investors want different things out of an investment. There are plenty of people who would see that. And of course, because the share price is down, there is a probability, a good probability that it could go up over time because it's just so low. Now, the share price has dropped 80%, so it's definitely so much lower than it was. The business isn't in bad shape. We can see that it's got good cash flow, still got growth, but it's got this competition. So the question is, because it's dropped so much, will the market see it as a positive thing eventually? Will it turn around? The new CEO, profitability, will it get better over time? There could be a few different ways it could go. There could be more downside to come if the market, if it doesn't work out with the new CEO and they make some mistakes. There's no reason why the share price couldn't go down. But if we're a long-term investor, is this a good entry point? It could recover a long way from here. It has been a lot higher than that. There was so much excitement around in this space in 2020 and 2021 with a number of companies, and it seemed to me like it was going to drop away, and it has. But 80% down for PayPal really is a lot. Now, if you're watching this video on YouTube or on X, please don't forget to hit that like button to help the algorithm to spread it to more people, help with visibility. Now, there's also a way to show your appreciation if you feel like it by buying me a coffee. You can go here to do that. As you'll understand, it takes quite a lot of time each week to put these videos together, so I would appreciate that show of support. Thanks. So after looking briefly at PayPal, my initial thoughts, not in depth, I haven't done a huge amount of work on this. PayPal is not for me as an investment. That's just my opinion, not investment advice. A few general reasons for this. As I said, that I like to see companies with growing market share and not such intense competition. However, there is a chance, there is a possibility that they could fend off the competition and remain strong. The new CEO could be great and make a wonderful acquisition of something and transform the company, or just do a really good job in increasing profitability and increasing market share, or just having growth. And the margin expansion alone, from the price being so depressed at the moment from where it was, that there's a good probability that it could go up. And it could it be like Meta when it was so down, so depressed in the market, and it went shot straight up. I think that seems unlikely that it will do the same thing as Meta, but I think there's probably a good probability that it will go up over time. As I said, we've got good cash flow here, we've got the possibility of growth, but I just don't like the intense competition. If we think about moats, moats are very important. Warren Buffett said that. Is the moat here being eroded over time? Even though the share price has gone down so much, it's very tempting. I wouldn't go as far as saying this is a value trap, and it might outperform the market over time simply because it's down so much. PayPal is not for me for those reasons. I think there are better companies out there, and smaller, better companies from that point of view, about in terms of growth. And I just don't like the space with such intense competition. But that's just me. The stock could very well do well over the next few years. It could go either way. But initially, just looking at it, as I said, I hadn't done really in-depth research, and I'd want to do that. But for me, this is not for me. I think there are better possibilities out there. I much prefer companies with founders that are still there, founder-led, that have got a lot of skin in the game. And PayPal does not. I understand the management does not have a lot of skin in the game. So do they really care? Are they aligned with shareholders like that over time? They don't have a lot of their own money at stake here. With a company like Meta, when you have Zuck still in charge there, that's a different story. And there are some other companies, even big companies with that situation, where the people at the top are much more aligned with shareholders. I don't see that in this situation. So that's another negative for me. Do not take this as advice. I'm just telling you what I'm doing, what I think about this. For me, I don't see this as interesting over the long term. I know that a lot of people do. I see a lot of investors, including value investors, interested in this stock and buying it at this point just simply because it seems really cheap. But that's not enough for me at this point. Now, if you're watching on YouTube, I'm going to put a link here to the video that YouTube thinks that you should watch next. So go and see that now. And thanks for watching or listening, and I'll see you in the next one.